So we are doing the sum of 2023. Last year, 6711 set 1. This is a sum of cash flow which is come for 6 marks. So every year you will receive cash flow sum of 6 marks. Even this year you can receive that. Please read the question. Yasir, can you please do that? Read the following hypothetical text and answer the given questions. Can you please read?
At the time, there were no many players in the market, and they thought to fill the gap, they used user-friendly website.
Okay, fine. So you've been given a balance sheet of the company. What you've been given? You've been given the balance sheet of the company, and you are asked to calculate cash flow. Cash flow from operating activities. You are asked to calculate what? Cash flow from the operating activities. So this is the balance sheet that is given to you. Just go through it. Just go through this balance sheet. When you're going through the balance sheet, while reading, you start doing the markings. Come on. Everything here on the shareholders' funds. Reserves and surpluses will be used for what? Reserves and surplus will be used for net profit before tax and extraordinary items. You should know this. Without markings, there is no sum that can be done. Okay. So reserves for tax will be used for net profit before tax and extraordinary items. Are you with me? Yeah. Okay, fine. Then I am going to share capital. Can you tell me where will the share capital go? Which activities? It is financing activities. Long-term borrowings, which activity? Long-term borrowings will be financing activities. Provisions. Whenever you have provisions, what will you do? Where will you go and check? Whenever you have provisions, you can go and check your notes to account. Okay. So if you see this provision over here, you have opening provision, you have closing provisions, and you have tax paid during the year. Okay. So can you prepare the provision for tax account? In your notebook, start preparing provision for tax account. So when I make my provision for tax account, okay, I know opening provisions. Opening provision comes on the credit side. Closing provisions will come on the debit side. Closing provision comes on the debit side. Bank will come over here on the debit. And whatever goes in your profit and loss account, that means whatever is adjusted in net profit before tax and extraordinary items. Okay, this is this part that is adjusted in net profit before tax and extraordinary items. Okay, what is my opening provisions? Can you tell me? 210,000. My closing provisions is 204,000. What is the amount of tax that I have paid? 80,000. Yeah. So what is the amount that is going to come in net profit before tax and extraordinary items? Okay, so this is 284,000 minus 210. So 74,000 will come in profit before tax and extraordinary items. Please note, they want me to calculate only cash flow from operating activities. Okay, so cash flow from operating activities starts with what? Can you calculate net profit before tax and extraordinary items for me? Calculate. So first thing, I have to calculate net profit before tax and extraordinary items. Net profit before tax and extraordinary items. How will I get that? So I will go to my reserves and surplus. In my reserves and surplus, I have only two things. Closing minus opening. How much? Closing minus opening. If I see my closing is a less figure and opening is a bigger figure. So closing minus opening is giving me a loss. So closing is 75,000 minus 360,000. So I will have my profit, net profit. How much? So my net profit is negative 2,85,000. In that, what do I add? I add the provision for tax. I add proposed dividend. I add transfer to reserves. Is there anything of such sort over there? No. Which provision for tax will I add? Which provision for tax that I have created? Okay, what is the amount of tax that I have created? I already made this account. I already made this account. This amount will go in my net profit before tax and extraordinary items. So I will add the 74,000. So my net profit before tax and extraordinary items is how much? So I see 2 lakh 11,000. This is my net profit before tax and extraordinary items. This will become my working note number 1. Are you with me?
Yes.
Okay. Come on. Now again I am reading my question. Working capital changes I can see over here. It's increase or decrease? It was 60. It has become 18. It is increase or decrease? Decrease. Decrease of current liability, add or minus? Current liabilities will go in the same order. Current assets will go in the reverse order. So decrease of current liabilities, add or minus? Current liabilities, same order. So this is decreasing, this is reducing. Current liabilities, same order. So current liability is reducing. Reducing. So I will minus. Yes. Current liabilities in same order. Current assets in opposite way. So decrease in current liability, I will minus. How much is the decrease? Can you tell me? Is 42,000. So I will minus 42,000. Are you with me? Provisions are adjusted where? Where is provision adjusted? Short-term provision is provision for tax. Where does this go? Net profit before tax and extraordinary items. Are you with me?
Yes.
Now we have the asset account. So whenever I have an asset account, I have this asset account. I will have to prepare assets. Asset accounts goes at 4 places. What is the 4 places where you adjust your asset account? Investing activities, depreciation for the current year, operating activities, and profit or loss on sale of non-current asset operating activity. So you can pause the video, take some time, prepare asset account, and then come to me. Then come back and start. Okay. So when you were asked to prepare asset account, you said that you don't need to prepare asset account. The reason being there is no sale of non-current asset. Yeah, there is no sale of non-current asset and the depreciation of the current year is not given. So I can find out depreciation of the current year from the opening to the closing. There is an increase in depreciation. How much is the increase of depreciation? 144,000 minus 69,000. How much is the increase in depreciation? 0,003. 10 take away 9, 5, 4, 5, 6, 7. 75,000 is the increase in depreciation. So I get depreciation of the current year. How much? 75,000. What is this done? What is the depreciation for current year done? Add non-cash, non-operating expenses. This is non-operating expense. I go and read ahead. Opening cash and cash equivalent comes at the end. Now I have inventory. Inventory is reducing. Decrease in inventory. Decrease in current asset. Add or minus. Decrease in inventory. Add or minus. So this will be added. How much will be added? 387 minus 354. 33,000. So 33,000 will be added. Are you with me?
Yes.
Then when I am reading, I also see 10% debentures. So 10% debentures were issued on 31st March 2021. That means interest on debentures, 10% will be interest on 2,40,000, that is 24,000. Which activity? Operating activity and financing activity. So with this, I have done all my markings. Now I can start doing the sum. What do they want me to find out? They want cash flow from operating activities. So we'll start. What will we write first? Net profit before tax and extraordinary items. Please write along with me. How much is it? 2,11,000. We made a working note for it. Then what do we do? Add non-cash, non-operating expenses. The first one is the depreciation for the current year. We calculated it was 75,000. And interest on debentures because this is non-operating expenses. How much is your interest on debentures? 24,000. Add. 0, 0, 0, 5, 6, 7, 8, 9, 10. 7, 8, 9, 10, 11. So this becomes 310,000. Okay, there is net profit before tax and extraordinary items is a negative figure. So I've done a mistake. From 211,000, I will deduct 99,000. My answer will still be a negative figure. 211,000 minus 99,000. So this becomes 112,000. Are you with me?
Yes.
Add non-cash, non-operating expenses. Less non-cash, non-operating income. There is no non-cash, non-operating income. So what is this? This is net loss before working capital changes. Now what do you have? You have decrease in trade payables. You have decrease in trade payables and increase in inventory. So decrease in trade payables you will minus an increase in inventory. Decrease in inventory, right? Decrease in inventory. You will add. How much it is? 33,000. Now since this is negative, then we have to do the calculation directly. From 42,000, if you minus 33,000, how much do you get? 42 minus 33. 10 take away 3, 7, 8, 9. 9,000. 9,000 will still be a negative figure. So 112 plus 9. 121,000. What is this called? What is this called? Cash generated from operations. Then what do you do? Minus tax. How much? Tax paid is given to you. Remember, provision for current year is added to net profit before tax and extraordinary items. And tax paid during the year is deducted. So you have net cash outflow, or I could say net cash used. Net cash used in operating activities. 201,000. With this, I complete the requirement of the question.